Most people look at a bank and see a vault, a secure, neutral place where money is kept safe, interest is calculated, and everyone plays by the exact same set of rules. But if you look closely, behind the glass counters and the automatic sliding doors, you realize something completely different. A bank is not a vault. It's a mirror. It reflects exactly how much leverage you have over society. If you walk into a branch with $0 to your name, the system treats you like a liability, a problem to be managed, automated, and systematically charged for being broke. But if you walk in with $10 million, the rules twist, the fees vanish. Suddenly, the bank isn't managing you. The bank is serving you, shifting its entire global apparatus just to keep you happy. Today, we follow Noah through the invisible tiers of the modern financial system. We're going to look at exactly how banks treat you at every level of wealth, why it actually costs more to be poor, and the exact point where a bank stops taking your money and starts handing you the keys to the kingdom. We start at level 1. This is the survival bracket. Noah has exactly $42 left in his account, and his rent check just hit a day before his paycheck cleared. At this tier, banking isn't convenience. It's an obstacle course. This is where you encounter the most ironic phenomenon in modern economics, the cost of being broke. When you have millions, banks give you money for free. When you have nothing, they fine you for it. If Noah's account balance falls below a certain threshold, say a $1,500 minimum daily balance requirement, the bank automatically deducts a $12 monthly maintenance fee. Think about how backward that is. The bank charges Noah money simply because he doesn't have enough money for them to look at. Then come the overdraft fees. If Noah accidentally spends $35 on groceries, when he only has $32 in his account, the bank doesn't just stop the card. They clear the transaction anyway and slap him with a $35 overdraft penalty. For a wealthy person, $35 is pocket change. For Noah at this tier, that's a day's worth of food, wiped out in a millisecond. At level 1, you do not have a relationship with your bank. You are processed by an algorithm. If you call customer support, you sit on hold for 45 minutes, listening to generic jazz music, only to speak with an offshore call center worker, reading from a rigid script. To the bank, people at this tier are statistical noise. They are a high-volume, low-margin demographic used to generate billions in fee revenue, to subsidize the perks of the upper tiers. Let's move Noah up the ladder to level 2. He's landed a stable job, built a modest emergency fund, and maintains a balance anywhere between $1,000 and $50,000. At this tier, the direct hostility ends. The bank stops hitting you with monthly maintenance fees because you satisfy their minimum deposit rules. You are officially part of the profitable baseline. But make no mistake, the bank is still quietly draining your wealth through a process called the spread. Noah thinks his money is safely growing in his savings account. The bank pays him a meager 0.01% annual interest rate. If Noah keeps $10,000 there for an entire year, the bank hands him a single dollar bill as a reward. Meanwhile, inflation is eroding his purchasing power by 3% or 4% a year. What is the bank doing with Noah's $10,000? They turn around and lend it out to someone else via credit cards at 22% interest, or mortgages at 7% interest. Noah takes all the inflation risk. The bank takes all the profit. When Noah walks into a branch at level 2, he is treated with polite neutrality. The tellers call him sir. But their primary objective isn't to protect his wealth. It's to cross-sell him debt. They will pitch him basic reward credit cards, auto loans, or high-fee mutual funds managed by the bank's in-house advisors. You are a retail consumer. You are allowed inside the building, but you are still sitting in the waiting room. This is where the paradigm begins to shift. Once Noah's liquid relationship with the bank passes $100,000, he crosses an invisible threshold into premier or preferred banking. Suddenly, the red carpet starts to unroll. The first thing Noah notices is that his physical presence in the bank changes. He doesn't stand in the long teller line with everyone else. He is escorted into a private glass office. He is introduced to his dedicated relationship manager, a clean-cut professional whose entire job is to keep Noah's money inside this specific institution. At level 3, the bank stops trying to nickel and dime you. All those tedious fees from level 1 and 2, completely erased. No ATM fees anywhere in the world. No wire transfer fees. No overdraft worries. When Noah calls a phone number on the back of his new premium debit card, the automated robot voice vanishes. The phone rings twice, and a real local human being answers the line by saying, "Welcome back, Mr. Noah. How can I assist you today?" Why is the bank suddenly so kind? Because Noah is no longer just a customer. He is an asset. The bank knows that if someone has a couple $100,000 sitting in cash or basic stocks, they are highly likely to eventually buy an expensive home or need a major business loan. The bank waives a few $20 wire fees today, so they can lock in a $30,000 mortgage origination fee tomorrow. Now, we step into the true upper echelon. Noah hits level 4, $1 million to $5 million in liquid wealth. At this point, Noah leaves retail banking behind forever. He is officially invited into the world of private banking. When you reach this level, you rarely ever visit a physical bank branch. If you do, you aren't going to the building on the street corner. You are going to a secure floor in a corporate high-rise with a private elevator. Your private banker isn't just someone who waives fees. They are a financial concierge. If Noah wants to buy a luxury vehicle over the weekend but doesn't want to deal with moving funds around, he doesn't log into an app. He sends a single text message to his private banker. "Hey, Julian, I'm buying a Porsche. Handle the wire for me." And it's done. But the real magic of level 4 isn't convenience. It's leverage. This is where the bank introduces Noah to things the public never sees, like Securities-Backed Lines of Credit, SBLOC. Imagine Noah wants to buy a $2 million investment property. A normal person has to sell their stocks, pay a massive capital gains tax, and apply for a traditional mortgage with weeks of paperwork. At level 4, the bank tells Noah, "Don't sell your stocks. Keep them growing. We will use your $3 million stock portfolio as collateral and cut you a check for $2 million in cash by tomorrow morning. And we'll charge you an interest rate way lower than any standard mortgage on the market." This is how the ultra-wealthy buy real estate, fund businesses, and live luxury lifestyles without ever triggering a taxable event. The bank isn't holding Noah's money anymore. They are helping him weaponize it. Finally, we reach the apex. Level 5, $10 million and beyond. At this tier, the relationship flips entirely. Noah does not adapt to the bank. The bank adapts to Noah. He is no longer just a private banking client. He is a sovereign financial entity. He enters the realm of the private office. When you have over $10 million, the bank treats you less like a customer and more like an institutional partner. You get access to alternative investments that are legally locked away from the general public. Institutional-grade private equity, exclusive venture capital rounds, and direct real estate syndicates before they hit the open market. That at level 5, The bank builds a custom financial fortress around your family. They provide dedicated asset protection specialists, trust lawyers, and cross-border tax strategists, whose entire objective is to make sure your wealth survives for generations without being eroded by Uncle Sam. If Noah wants to buy an international property, structure a multi-million-dollar trust for his children, or borrow $50 million to buy a corporate jet, the bank's internal credit committee meets specifically to write a custom loan structure just for him. The system has come full circle. At $0, the bank treats you like a product to extract fees from. At $10 million, the bank treats you like royalty, absorbing risks and offering unparalleled leverage, just to ensure your capital stays under their roof. The stark reality of the banking system can feel incredibly discouraging when you look at it from the bottom up. It is a system undeniably designed to reward those who already have abundance, while penalizing those trying to build it. But knowing how the latter works is your greatest advantage. You don't need $1 million today to start playing the game differently. You can outsmart the system by refusing to play on their terms at the lower levels. Switch from big commercial banks that drain you with maintenance fees to high-yield online banks or local credit unions that offer free checking and actually pay you real interest on your savings. Avoid the high-fee retail funds they pitch you and look into low-cost index funds to grow your capital independently. The bank is a tool. If you don't learn how to use it to climb the ladder, it will use you to build theirs. Climb the tiers, control your leverage, and change the mirror. See you in the next one.